Did you know that after reaching a record high, Wall Street took a small step back recently? It all happened because of a surprising report about how much people are spending in stores. Let's explore what exactly went on and what people are saying about it.
Hey Grace, did you hear that Wall Street slipped a bit after hitting a record high?
Yeah, I caught that. Something about a weak economic report on shopper spending, right?
Exactly. The latest data showed that people aren't spending as much as expected at retail stores, and that caught investors off guard.
Wow, so even with inflation still pretty high, less spending means the economy might be slowing down?
That's one way to look at it. The tricky thing is, lower spending could keep interest rates low, which the market usually likes. But on the flip side, it also signals that economic growth is struggling.
That's a tough balance. Did the stock indices all move down together?
Mostly. The S&P 500 dropped about 0.2% from its record high. The Dow fell a similar amount, and the Nasdaq lost a bit more, about 0.3%.
Minor losses, but meaningful after reaching those all-time highs.
Exactly. Investors started with modest gains in the morning, but oil prices pushed higher during the day, shaking things up.
Right, I heard Brent crude oil jumped nearly 2%. Something to do with tensions in the Persian Gulf and Iranian conflicts?
Yes. Ongoing uncertainty about when oil tankers can freely move through the Gulf is spooking the market a bit.
Oil prices always seem to have that big ripple effect, don't they?
Totally. When oil moves unpredictably, it adds a layer of risk because it affects production costs and inflation.
So between the weak retail sales and rising oil prices, investors have a lot to chew on.
They do. Honestly, I think the market is trying to digest these mixed signals. On one hand, slower consumer spending suggests a cooling economy, but low interest rates could keep it afloat.
Makes sense. It's like the market's walking a tightrope, balancing optimism and caution.
That's a great way to put it. Plus, the Fed's next moves with interest rates will play a big role in where we go from here.
Do you think the Fed might keep rates low longer because of this?
Probably, at least for now. They want to avoid choking off growth completely, especially with inflation not easing as fast as they hoped.
Investors must be watching those developments closely.
Absolutely. Even small changes in economic reports can set off shifts in market sentiment.
It's fascinating how interconnected everything is. Spending habits, oil prices, interest rates, and the stock market.
Yeah, and it all boils down to confidence. If people and investors lose faith, things can turn south quickly.
But if they stay hopeful, markets can bounce back just as fast.
Exactly. That's why these slight dips or slips are just part of the bigger picture, not the end of the story.
I guess it highlights how important it is to look beyond headlines and understand the details.
For sure. And talking about this helps us get a clearer picture.
Definitely. Thanks for breaking it down, Ryan.
My pleasure. Always good to chat about real news in a way that makes sense.
Agreed. Hopefully the economy finds some steady ground soon.
Fingers crossed. Until then, we watch, learn, and keep the conversation going.
Sounds like a plan. Now let's review some useful vocabulary from our conversation. These words will help you talk about the economy and markets with more confidence. A record high means the highest value something has ever reached. For example, the stock market hitting a record high means it's at its all-time top level. Retail sales are the total amount of goods that customers buy directly from shops. It's a key indicator of how healthy the economy is. An interest rate is the percentage the bank charges or pays when you borrow or save money. Central banks often change it to control the economy. Inflation happens when prices rise steadily. It means your money doesn't buy as much as before, which can be worrying for people and businesses. Stocks are shares or parts of companies that people buy. They represent ownership and can change value based on the company's performance. To slip means to fall or go down a little bit. In finance, if the market slips, it loses some value, but usually not a lot. Uncertainty means not being sure about what will happen in the future. It often causes people to be careful or worried in their decisions. Modest means small or moderate in size or amount. A modest gain means it wasn't big, but still positive. Tension refers to a feeling of stress or disagreement between countries or groups. It can create uncertainty in markets and politics. Let's take a look at some idioms and phrasal verbs from our chat. These expressions will help you sound more natural when discussing news and the economy. Digesting information means taking time to understand or absorb it. People use this phrase when news is complex or surprising. To walk a tightrope means to try to keep balance between two risky or tricky situations without falling on either side. Shake things up means to cause some changes or surprises, often in a quickly moving situation like the stock market. Bounce back means to recover quickly after losing strength or value. It's common when talking about markets or people recovering. Great! Now it's time to practice pronunciation with shadowing. Listen carefully and repeat the sentences after me. Wall Street slipped a bit after reaching a record high. The latest report showed weaker than expected retail sales. Lower spending could slow down the economy, but keep rates low. Oil prices rose almost 2% due to tensions in the Gulf. Investors are carefully digesting the mixed economic signals. The market seems to be walking a tightrope right now. Sometimes the stocks bounce back quickly after a small loss. Today we talked about Wall Street's recent dip after surprising news about the economy. You've learned advanced words and natural expressions to discuss these complex topics. Keep practicing, and next time you hear financial news, try joining the conversation yourself. What do you think will happen to the stock market in the next few months? Let us know your thoughts.